Thanks, Eliza, and thanks very much for the opportunity to present here today and for everyone's attendance. I'd like to take a slightly different tack here now with the speeches. I think we've had a really insightful session into a lot of very exciting projects. Obviously, the fundamentals for copper are extremely sound. In our case, New World's case, then we are deliberately focusing on grade. So New World's primary focus is on the Antler copper deposit in northern Arizona. We've heard a lot today about companies that are reworking old projects. In our case, we got involved in Antler just over 2 years ago, and it was an old project that was mined between 1916 and most recently in 1970, and it was a very high-grade producer of ore. In fact, the grades that were mined previously were up to 5% copper equivalent. So we acquired the project. Our company took a fundamental view on the outlook for copper, and we deliberately wanted a project that could be brought to production quickly. And in that way, we see that we can best capitalise on the impending, at the time, and it's now apparent, elevated copper price cycle. So we are actually targeting commencement of construction in 2024. And because of the grade, we're targeting a low capex, relatively low footprint, but a high margin proposition. So with that, it's a small footprint. Indeed, because of the grades, we anticipate that we will be using paste fill. So up to 60% of the product that we mine is likely to be returned back underground, which makes it an extremely low footprint opportunity. Back 2 years ago, we took a 4-year option to acquire 100% interest of the project. Because of the success that we've had over the last 20 months, then we've exercised that option early. So a month ago, we purchased 100% interest in the project for $1.3 million. So this project is now ours, and no one can take it from us. It is on privately owned land, and the mineral rights have been deeded to the discoverers of the deposit back in 1880, and indeed those mineral rights persist to the centre of the earth. So no one can take those rights from us. Even if the copper price collapses tomorrow, if there's another GFC tomorrow, then New World will continue to own 100% of that project, and the holding cost of that project will be about $200 a year in taxes. So just corporately, New World's got a relatively small, relative to SolGold, 1.6 billion shares on issue, a billion less, but a much lower market cap. Market cap of about 125 million. We've got about $17 million cash at bank at present, so we're very well funded to continue our exploration and permitting activities to take Antler into production. In terms of people, then personnel-wise, then a very notable addition to our board several years ago was a guy called Tony Polglaze. Tony Polglaze did a very, very, very similar thing in Brazil. Back in 2008, he acquired a small high-grade copper deposit. They had exploration success there. He took it through permitting, through feasibility studies, through financing, into production, and 3 years ago they were taken over by Oz Minerals for $450 million. That was prior to the current copper price cycle. So here we are building out a team to take this project to production to capitalise on the high copper prices. Location-wise, we're about 2 hours to the southeast of Vegas and about 3 hours northwest of Phoenix. It's a fantastic place to be doing business. It is arid, very sparsely populated, but we're only 20 kilometres from a railway and 20 kilometres from an interstate highway and 40 kilometres from the town of Kingman, where there's 35,000 people living. So skilled workforce, skilled to the point where 70% of the US's copper production comes from Arizona. So Arizona knows copper. In this part of Arizona, up in northern Arizona, there's 30 or 40 known high-grade VMS deposits. So this is not a standalone deposit. We know that there's a cluster of deposits of this type, these very high grades that extend over a district that extends about 300 kilometres east-west and a couple of 100 kilometres north-south. The biggest of these deposits that we know at present is the United Verde deposit. And at United Verde deposit, 33 million tonnes of high-grade ore, 4.8% copper ore, has been mined, there still remains at least 20 million tonnes of high-grade zinc ore in that deposit. So these VMS deposits in this part of the US can be up to 50 million tonnes. Or they can be extremely high grade, just like the UVX deposit, where almost 4 million tonnes of ore was mined at a grade of closer to 10%. With respect to Antler, what have we acquired? We've acquired a deposit where historically 70,000 tonnes of ore were mined. About 60% of the value of the metal is derived from copper, and about 30% of the value of the metal is derived from zinc, but that can vary a little bit because these VMSs can be zoned. The most recent mining at Antler was in 1970, when 32,000 metric tonnes of ore were mined. And in total, there's only been 70,000 tonnes of ore mined previously, with most recent production in 1970. But the key thing for us was in 1975, 9 exploration holes were drilled, over 500 metres of strike, down to 550 vertical metres, and 8 of those 9 holes intersected massive sulphide mineralisation and high-grade massive sulphide mineralisation. So these were very broadly spaced holes. It was extremely bold exploration to drill down to 550 vertical metres, but 8 of those 9 holes intersected mineralisation. And we were really excited by that. On that basis alone, there was a historic resource of around about 5 million tonnes. But that resource was based on some pretty flimsy data because the historic drilling was very wide spaced. So we can see in cross-section here that the deposit dips at about 60 degrees to the west-northwest. If I flip that cross-section around into long section now, then on the left-hand side here, we can see in pink the historic workings with the deepest stope, which one's, is it the red one? The deepest stope here in pink being the 32,000 tonnes of ore that was mined in 1970. So that puts things in perspective. That was from 150 metres below surface, and prior to that another 38,000 tonnes of ore had been mined from within 100 metres of surface. But the deeper drilling that was done in 1975 extended down as deep as 550 vertical, and it extended over 500 metres of strike, with outcropping mineralisation over 750 metres of strike. So we set about testing to determine the continuity of the mineralisation between those historic holes. So to this point, New World has completed 78 holes for over 30,000 metres. Of those 78 holes that we've drilled, not a single one has missed mineralisation. Every single hole that we have drilled, over 500 metres of strike, down to almost 550 vertical metres, has intersected mineralisation. One hole missed massive sulphide mineralisation, just one hole, and that was the hole at the very northern end of the deposit, at the very shallowest portion of the deposit. Without exception, well, with that only exception, every single hole that we've drilled has intersected massive sulphide mineralisation. And for the most part, just about every hole that we have drilled has been in this envelope that had been drilled previously. So we've now got a couple of holes drilled a little bit deeper here in Main Chute, a couple of holes drilled deeper in South Chute. We think we're onto another discovery here in a possible third chute. So these are these zones here. But because of the success that we've had from drilling just with this envelope, 2 weeks ago we declared a maiden resource. And the maiden resource we've declared, using a 1% copper equivalent cutoff, is 7.7 million tonnes at 3.9% copper equivalent. Now that 3.9% copper equivalent is contemplating metallurgical recoveries. So it's contemplating 87% recoveries for copper. It's contemplating 88% recoveries for zinc. If we took 100% of the contained metal, as many companies do, then we would be reporting 7.7 million tonnes at 4.6% copper equivalent. This is a very, very high-grade resource. Indeed, there was some research published yesterday that states that this deposit is the 33rd highest grade deposit in the world. So this research that was published yesterday stated there's 830 copper deposits in the world greater than 3% copper equivalent. And ours is the 33rd highest grade deposit, with most of those higher grade deposits sitting in Africa and Russia. So this is a very significant deposit, and we haven't even touched the surface here. Now, in terms of the robustness of the resource, 74% of our resource is sitting in the indicated category. So we know there's good continuity between mineralisation. But if we apply even more stringent cut-off grades, such as 2%, then we see that the resource base sits at 6.7 million tonnes at 4.3% copper equivalent. Or if we go even more harsher on the deposit, at a 3% copper equivalent cut-off, then there's 5 million tonnes at 4.8% copper equivalent. So what does this mean? In our view, this means that we are approaching, if we're not already there, having a critical mass to start a very high-grade mining operation. The mining operation that we're contemplating is most likely going to be an underground-only operation, moving 800,000 to 1 million tonnes per annum, initially with a mine life of probably 6, 7, 8 years, but this deposit is completely open at depth, and it's completely open to the south. So we know over the next 2 years that this deposit is going to get bigger. Our immediate target is to define 10 million tonnes. Our internal target is to delineate 15 million tonnes. And if and when we approach 15 million tonnes, hopefully we're reassessing and targeting 20 million tonnes. We can always scale up production. We can always extend the mine life. But there's no good having exposure to a $15,000 a tonne copper price if you're not going to maximise your exposure to a $15,000 a tonne copper price, as Goldman Sachs is predicting, if you're not in production. So we are heading down the path of production, targeting 2024, and at the same time, we are going to continue to expand the resource base. We see that as the way to maximise our returns to shareholders. So what's going on now? We've kicked off mining studies to get a mine plan in place so we can apply for mine permits in Q1 next year. While we go through that, we will continue to explore. We've currently got 3 rigs operating on the project, and they're drilling deep holes to extend the resource. But in terms of targets that we have, then over the course of the last 12 months, we've done a lot of mapping, a lot of geochemistry, and a lot of geophysics. And all of these data sets say that this system is a lot bigger than we've touched to date. So we've got a mag anomaly. The mag anomaly is coincident with the historic workings. So the historic workings just sitting up in here. Historic stoping extended over about 100 metres of strike. We've got a 1 kilometre long mag anomaly that is perfectly coincident with the deposit. And that mag anomaly indicates that we should be heading south. Following acquisition of that mag data, we did ground EM. This is massive sulphide mineralisation. I used to be a geophysicist. Extremely surprisingly, there is not a diagnostic EM response on this deposit. But that didn't deter us. This is sulphide rich, so we did IP. We got a 500 metre long IP anomaly that said drill south. Our very first hole that we drilled outside of the historic workings and outside of the main chute intersected 22 metres at 2.2% copper equivalent in this mag anomaly, in this IP anomaly. And since then, we've returned some phenomenal results from that area, and I'll talk briefly about them shortly. And we've also done CSAMT, another electrical geophysical technique that indicates that the deposit may well extend for another 150 metres south of where we've drilled to date. So let's go back to the long section, to look at some of the results that we've been intersecting in these main chutes, south chute, and the possible new chute. And I want to refer you to the deepest holes that we've been drilling because this is where mineralisation remains open at depth. So in the deepest parts of main chute here, about 550 metres below surface, the 3 deepest results that we've reported, 25 metres at 5.2% copper equivalent, 15 metres at 2.9% copper equivalent, and another intersection where 2 zones were intersected, 14.3 at 3.8, followed by another 5 metres at 2.7% copper equivalent. Whoops. Sorry. So that mineralisation in main chute is completely open at depth. Extremely good thicknesses, very robust mineralisation, extremely high grades. In South Chute, where we discovered this South Chute by initially testing the IP anomaly. The 3 deepest holes in South Chute, 17 metres at 5.5% copper equivalent, 16 metres at 3.3% copper equivalent, and 7.3 metres at 4.2 and a further 3.1 at 6.4% copper equivalent. These aren't 0.6s, these are 6.4% copper equivalent, extremely high grades. The mineralisation in South Chute seems to be getting better with depth. And then if we look at the possible new chute with a slightly different presentation, this is a copper equivalent grade thickness. But at the very southern end of the deposit, the deepest holes that we've returned there is 10.3 metres at 2.3% copper equivalent, with mineralisation remaining completely open at depth. So just to conclude, where are we going with this? We are fast-tracking Antler back into production. We are looking at a low capex, probably the order of the low $100 million capex, $100 to $150 million capex. That will be determined over the coming months. But a high margin because of the high grades, a low surface footprint, rapidly permitting Antler back into production. The permitting framework in northern Arizona on privately owned land, which is where we are, is extremely good. We are looking at an 18 to 24 month permitting process, and through that time we anticipate we will complete pre-feasibility studies, definitive feasibility studies, solely finance this project without having to bring a partner on board, with in all likelihood having a large component of debt, because the economics of this project for the development of it will look extremely robust. Thank you.